Today on the Blockchain Report, Bitcoin sitting at 116K. Maybe it's because institutions are gobbling up BTC and Ethereum while retail apes into PopCat like it's a lottery ticket. Congress just launched Crypto Week and the Dictator Amendment is somehow very real legislation. And Satoshi Nakamoto is now the 11th richest person on Earth without ever cashing out. All this and more right now on today's show. Let's go! Victor, my TVs aren't working. They're both frozen. All right, everybody, good morning, my digital degens, crypto cowboys, and everyone still checking CoinGecko like it's Tinder. I'm Hank Hudson coming to you live from San Francisco, California, where the scooters are rentable, the rent is not, and your Uber driver might also be your Series A investor. It's Tuesday, markets are twitching, Coinbase stock is pumping harder than a CrossFit trainer on trend, and Bitcoin, well, Bitcoin's been flirting with a new all-time high like it's in a situationship with market logic. Now, before we wade into today's crypto chaos, do me a favor, smash that like button like it called yo mama ugly, and follow RoxomTV and yours truly at Hank at RoxomTV on all platforms still brave enough to let us speak in favor of monetary sovereignty. So whether you're tuning in from your home, your office, or your mom's iPad that she never uses, let's hop into today's financial circus. But before we do, I want to take a peek at how the numbers are looking in this morning's market rundown. Let's go. All right, Victor, I don't know where we are. All right, so the market rundown this morning and things are looking not great. Yesterday we were feeling pretty on the precipice of new all-time highs. We hit that 123K mark in the early morning hours yesterday. Today we're seeing a bit of a pullback. Let's take a peek. Right now, Bitcoin sitting just above 116K. We've seen about a 3% dip in the last 24 hours. We've had some inflation data come in. A lot of others, that 50-day reminder to Russia that you're going to be getting tariffed too. The market doesn't seem to love that, and the prices are certainly reflecting that right now. Ethereum down just beneath that $3,000 mark. XRP down 3% itself, around $287 a token. Cardano's down 2.5%, and Dogecoin, never one to be left out of the party, is down 3.5% itself, sitting right around 19 cents a pop. Let's see if TradFi is looking any better. Kind of, not really. Dow Jones is down 0.5% this morning. The Nasdaq is actually up 0.5%. The S&P 5 is sitting at around 6,300. MicroStrategy, Bitcoin's down. MicroStrategy is following suit, down about $5 this AM. Coinbase is down nearly $4. Tesla is down a little over 1%. Nvidia having a nice morning. They're up nearly 4.5% today. And GameStop sitting around $23, $24 a share. We got a lot on today's show, including not one, but two special guests. So we're going to come back to all of that and more on the Blockchain Report after this break. Stay tuned.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, and we're back. We apologize for the delay this morning. We had a bird get loose in the studio, and he's been wreaking absolute havoc on everything this morning. I think he might have cursed us. We're trying to force him out, but it's not going great. I think he's building a nest by a couple of the servers over there. Robbie, get on that. Well, let's get back to it, gang. We have got a little treat for you this morning, a special guest, in fact. And this special guest, well, he isn't just watching Bitcoin reshape the world. He is helping drive that change from the inside of one of the most dynamic, high-stakes economies on the planet. He's leading the first publicly listed company in India to adopt the Bitcoin standard, a move bold enough to catch the eye of the one and only Michael Saylor. His background spans marketing, finance, and now full-on monetary transformation with a mission to onboard 100 million Indians into Bitcoin's future and build a corporate treasury that stands strong against fiat chaos. He's turning legacy infrastructure into a sovereign fortress and bringing Bitcoin to the heart of India's education and innovation engine. Please give a big blockchain report welcome to Sid Barwani. Sid, welcome to the show. And our studio audience is certainly happy to have you here, and so are we. How are you this morning?
Me.
Oh, the pleasure is all ours. So really quick, Sid, before we get into the nuts and bolts of everything this morning, for our audience out there that is not yet familiar with you, can you please give us a quick snapshot of your background and what led you to your current role as Joint Managing Director and CFO of JetKing?
Sure. So I've been part of JetKing for over a decade and a half now. I've led multiple roles in the business. It's a family-run business. It's a legacy business. The brand itself is around 78 years old, and this education business is about 40 years old. So it's been a long-standing brand for almost 78 years, right? I've seen multiple profiles. I've seen through marketing, through sales, through operations, and got very interested into Bitcoin since 2013 in my personal profile, and just understanding the whole peer-to-peer networks, how it works, and just back in the day looking at Napster, it kind of organically got into Bitcoin. And while we didn't take it as seriously in 13, what we did was start re-looking at it in 17. And when we did look at it in 2018, RBI, the Reserve Bank of India, banned Bitcoin in India to do anything. You cannot build a business, you cannot buy, you cannot hold, you can't do anything with Bitcoin. So we said, let's hold back, let's see what comes across. And in 2022 is when the ban came out. And that's when we said, okay, fine, let's start looking at it at an institutional level. That's when we sat down as a team and decided to take this on. Around that same time, it was Michael Saylor who kind of showed the structure. He created that playbook in terms of how you can take this amazing asset class and put it on your balance sheet to unlock a lot of capital, shareholder wealth, value, and whatnot. So in March of 2022, we went ahead and started buying virtual digital assets. And virtual digital assets largely started off with some stablecoin, Bitcoin, and Ethereum. When we did that, we did that for diversification for some time, and then we realized that maybe this is not what we were intending to do in the beginning. And in 2024, we established ourselves as the first Bitcoin treasury company of India, and the game is just getting started.
Very much so. And you said that you guys started taking notice of Bitcoin originally back in 2013. But it wasn't until 2017 when you really started to take it seriously. What was it about your time in 2017 where Bitcoin kind of really started to click for you? What was that transition like? Was there an aha moment?
So this was in 13. It was just more about the internet money, right? It was you were using this asset or this electronic cash transfer system just within internal circles in certain websites. And in 17, there was something interesting. My elder brother, who also is part of the business, he kind of moved Bitcoin into Ledger, the cold wallet. And when we saw that transfer of capital coming from the internet onto a cold wallet, which is not connected to the internet, and just the transfer of capital onto that small device at that stage was super interesting for us. And that's when we looked at it and we were just like, just hang on one second. And this looks like it can be moved across, it can be moved across countries, it can be moved across continents, it can be moved across planets at some stage. So we looked at it as now the way Saylor puts it, an electronic cash system or digital capital transfer. And that's when we realized that this was a powerful technology that was coming in. Of course, the volatility with the asset itself and the pricing itself was always coming, sometimes positive, sometimes negative. But we kept our eye on it largely because of how the technology worked and having spend so much time in technology, in our business, in IT services business. We looked at it as something that was going to reshape. We reshape. We couldn't say what shape and form, but reshape a lot of capital movement.
Was it that moment of seeing your brother move Bitcoin to a cold storage wallet that made you think, maybe we need Bitcoin on Jet King's balance sheet too? Or was there another defining moment where you decided we need to go Bitcoin treasury strategy with Jet King?
So honestly, in 18, when there was an RBI ban, but there was with the business that we would take it on our balance sheet. We did want to at that stage. There was on an OTC desk. There was about I think if I'm not mistaken about 200 Bitcoin that were available for a distress sale, and we thought this was the latter part of 17, and that's when we thought maybe we should get our company to buy it, which is Jet King. But at that stage, it was tricky. The regulations are still unfolding. Regulators are still not as open as how they look at this asset class. But in 17, when we had that opportunity of getting 200 Bitcoin on our balance sheet, we did think for maybe a couple of weeks, but then soon after that, there was a lot of negative sentiment around Bitcoin, and in 18, it was ultimately banned. So for a brief moment, we thought we could hold it on our balance sheet, but the structural evolution that has happened to Bitcoin on balance sheet since 2020, and the way Saylor has created the structure, I think that was the more deeper moment when it just came all together. The ban was lifted, Saylor played the strategy, and then we went ahead and looked at it in a different light on our balance sheet. So I think the maturity of the decision came in much later when we saw another listed company, which is Strategy, to execute something so phenomenal, and then we were just like, okay, fine, this makes sense. Let's go for it.
Yeah, it's certainly easier when you got a little bit of proof of concept, and Michael Saylor has certainly helped lead the way since about 2020 with that. What was it like, or how did you pitch the idea of Bitcoin adoption eternally at Jet King, and what was the initial reaction like there, especially if you were doing it back in 2018, 2017, very different landscape than we're seeing today. So I got to imagine there was probably a lot of people that were like, hold your horses, let's maybe think about this again, or was it kind of universally well received in Jet King?
No, so 17, 18 was super tough, right? It was tough in a way where no one understood what Bitcoin was. There was three of us, which is when I say three of us, it's three brothers. And we were talking about Bitcoin, talking about the technology, talking about blockchain, distributed ledger. And what ended up happening was we went to the board to kind of tell them that this is a new asset class. It's classified as virtual digital assets. Let's look at it. And it was dismissed. And it was dismissed to an extent where it was not relooked at after there was that negative sentiment in 2018. But in 2022, when we started buying, we played it out slightly differently. What we did was we educated pretty much all the stakeholders. Bitcoin is sensitive to what happens across the world, but it comes back, and we've seen it every time. In the last 16 years, there's been a lot of noise around Bitcoin, but ultimately it's been resilient, and it is one of those asset classes which has it's building an economy of its own, right? The Bitcoin economy, and then taking that forward into the capital markets, which no company today can do something like that, which is building their own ecosystem, which can be distributed to the larger audience. So I think just holding on to this asset, it's a long-term play. When we made this pivot, it was to say that we want to be the largest Bitcoin treasury company of India, and ultimately your balance sheet, having Bitcoin on your balance sheet, will possibly, let's just say, it's a resilient asset. It's something that kind of bulletproofs your balance sheet for the future.
Just Bitcoin treasury company in India, as you're the first right now, which comes with a lot of responsibility, right? I'm sure you got a lot of people looking at you, especially in India, in terms of how this is going to work or not work out. So with that responsibility, I wonder, like, what does it mean to you to be the first public company on a Bitcoin standard in India? And how seriously do you take that responsibility? Because there's a lot of people out there watching to see how this goes.
Sure. So I think a lot of it has to do with the right type of information and what we're trying to build. I think just besides the fact that you come out and say the pricing is this or pricing is that, or we are buying it now and selling it now. I think being ethical towards what we started off to say, for example, we are never selling. A lot of time people come in and ask us what is our risk mitigation strategy in terms of Bitcoin falling to 50,000, for example. We Our response to that is that we want to find ways to buy more at that stage. Ultimately, I think being true to the roots that you started off with and believing in Bitcoin as an asset class and educating and propagating that in the community. And India has a large community that I've come across after we made this position of Bitcoin treasury company. There has been phenomenal people who've reached out to me. They have come together and said they've been doing all this. They've been putting all of this work into educating about Bitcoin. But now that a corporate has come around, there is a lot more that they can do. The entire horizon is opened up. So having been the first company, there's a lot of positive advocacy that we have to do around Bitcoin. And while there is any scam happens around an exchange or any problems that take place around any cryptocurrency, Bitcoin gets a bad name. So you have to be the defender or the protector of that technology per se, and which is Bitcoin. And you have to make sure that when you're talking about that, there's Bitcoin and then there's everything else, right? So you don't there's no indulgence in any other cryptos, any other kind of tech that is unfolding, Web3, blockchain, none of that. So you keep that single-minded focus towards Bitcoin. And when we are doing that, that eventually is shaping up to be the right narrative for our for a lot of other corporates to look at it as well. There's a bunch of very interesting corporates who are wanting to evaluate this in India, and having spent time with them, I feel like you'll see a lot more companies coming up. It might just be we are first and one right now. There'll be maybe 10 soon. So it'll be all of us trying to do the right thing, which is, of course, only be talking about Bitcoin and not create this whole cryptocurrency atmosphere, which eventually I think will get Bitcoin to win.
Yeah, and we certainly appreciate you spearheading and leading the masses in what's one of the largest economies in the world that's still kind of starting to ingratiate Bitcoin slowly but surely into its own financial ecosystem. And I was doing some reading on you guys, and it looks like Jet King is aiming to hold 210 Bitcoin by the end of 2025. Which brings me to the question, how did you land on that number? Was 210 just feel right? Is that part with your allocation strategy at Jet King? Where did that number come from?
Sure. So, having been a microcap company, we have some restrictions in terms of how our stock moves, right? The valuation of the business depends on how many Bitcoin we are holding, how the MNAV moves. Um, Ultimately, the stock hits an upper circuit every day for 2% every day, or lower circuit, depends on how the trade is going. If initially we were looking at a much higher number, but because of this circuit breakers, the way we anticipate and the way we look at our funding and the raise that we are looking to do over the next few quarters, 210 is forecasted being slightly conservative. It's largely because we don't want to. When you go ahead with, say, you come on board and say I'm raising 100 million to do this, you get some kind of feedback, or you get some kind of eyeballs that you might not want. And that's when we said that we are in this for the long term. This is our purpose now. This is what we are building out for the next 50 years. And the right thing to do is just play slow, steady, get the Indian audience to really understand what Bitcoin is, how it kind of bulletproofs your own personal balance sheet. And then based on those assumptions, we said, let's look at this as, so it's forecast in short. It's our forecast till December is 210, and we wanted to be close to the 21 number, having it can have a slight variation of, I don't know, 5-10%, but wanted to
Yeah.
be close to the magic number of 21.
Okay, that makes sense. We appreciate you bringing us through that process. What was the treasury allocation process like during all this in terms of like on a compliance and accounting level? It seems like that would be specifically tricky in a country like India that I feel like is a little bit behind the Bitcoin curve right now globally, but you're certainly helping bring it to the forefront. Was that a difficult thing to navigate, all of the compliance and accounting issues you were encountering as you're putting
Totally.
that on your balance books?
Totally. So when we did start off, so this asset was looking like a financial instrument, right? Because in 2022, at some stage, it was treated as as a financial instrument. And when you have a 50-50 test with an operation business, and your financial assets becomes equal to or higher than your operational business, you get considered a deemed NBFC, and a deemed NBFC has to go through a very different regulation system. But as and when the technology was looked at differently, and today it's looked at as an intangible asset, and it's not a financial instrument, and that's the treatment that we do on our balance sheet. What ended up happening in this process was there was multiple, let's say, multiple nuances that we had to look at in terms of how this should be treated on our balance sheet. And when we did decide to go ahead and establish the intangible asset on our balance sheet, what ended up happening was we reinstated all of the last 3 years balance sheet first to get the right numbers on our balance sheet, and then get that published, which will be happening in this year. Because of how so I personally feel this whole strategy is only 60 months old. In say, let's say Jan of 2020, or around that time when Sailor started doing it, or maybe middle of 2020, I'm not sure at the exact time. Just the duration is only 60 months, so every jurisdiction has their own evolution in terms of how this asset is looked at. And having been the, let's say, the corporate flag bearers for Bitcoin in India, I think we've kind of established a certain, let's say, a certain system or a standard that a lot of companies will follow. And having done that, I think tomorrow, if there is some kind of different treatment that is looked at by the Ind AS, which is Indian Accounting Standards, we'll of course accommodate and see how it has to be relooked at. But my point is that it's all in moving parts. It's in multiple moving parts, and as and when there's more clarity, we adopt to that process.
Yeah, we're going to go to break in a sec, but before we do, I do have one question. You mentioned other people like kind of laying the groundwork for other companies to follow. As someone whose company is really raising awareness among other Indian firms in terms of this Bitcoin treasury strategy, have you found other companies reaching out to you to learn your model and kind of maybe replicate that? You said in the future there might even be 10 companies in India that are going to be
Yep.
following a similar playbook. Have they been coming to you for some advice?
Totally. I've been actively engaged with a lot of so there is two models unfolding. One is the Bitcoin treasury strategy, which is to hold Bitcoin on your balance sheet, like say like what Tesla does, and they've just holding some Bitcoin. And the other one is the operations, right? So you actively raise, you use capital as raw material, and or equity and debt as raw material, and then you buy Bitcoin. So there's a bunch of companies that have reached out to me asking what would be their right way to possibly do this. There's a lot of interest in a lot of newer, or maybe let's say micro cap companies who want to do the operations, and there's a lot of interest from a lot of large conglomerates who are possibly billion-dollar plus companies in the Indian stock market, and looking to see how Bitcoin can kind of be established. So I think everything boils down to how the regulations unfold, because right now there is just radio silence from a lot of people. Say for example, from RBI, SEBI doesn't have a view, which is the Security Exchange Board of India. My point is that I think in the next 3 to 6 months we will have a lot more clarity in terms of who is the final regulating body of this asset, as well as this technology. And at that point, you will see a lot more companies coming forward and saying, okay, fine, this is how it's looked at. This is the treatment. We are going ahead and taking this position on Bitcoin. as and there is a lot of private companies who are these large businesses who are looking to see if they're holding just simply cash on their balance sheet, if they can convert a percentage of it. So, for example, when we started this off, we spent that time to educate our board, right? Educate our stakeholders. So I think a lot of them are going through this process now, and they're talking about the benefits and especially the price action of Bitcoin right now. There's a lot of people super interested to just see to take some position on Bitcoin, if it's an operations position or it's a strategy position. But some exposure you'll see a lot more companies coming out in the next few months.
That's very exciting. Now, Sid, I know your time this morning with us is short. We got to let you go here in a sec. But before we do, one final quick question. As someone on the forefront of Bitcoin adoption in India, what do you think it would take for more Indian public companies to follow Jet King's lead and start putting Bitcoin on their balance books? Do we need more guardrails, government regulation, less regulation? What do you think it's going to take?
I think it's just, I think the two most important or three most important decision-making authorities, right? So, which is the Ministry of Finance, Security Exchange Board of India, and RBI, all of them coming out unanimously and saying this is their view of this asset, how possibly real estate is looked at, how gold is looked at, how equities is looked at. All of these are very mature asset classes in India or across the world for that matter. But all of these three regulating bodies need to come out and just say, this is what we know and this is what we think about this asset. And I think you'll see India eating up Bitcoin. I think you'll see a lot of large companies coming in and sucking up the liquidity of Bitcoin. And I think it's a matter of time. I think India is ready. And generally, if you see trend-wise, we adopt slow, but once we adopt, we just go all out. And you can say that for technology, you can say that for smartphones in terms of consumption. So I think it's just a matter of time, and it's around the corner.
Well, I'll tell you, as a Bitcoiner, I certainly love to hear it, and I certainly love that you are out there spreading the gospel, pushing the good word in one of the world's largest and fastest growing economies. So you are playing a really important role in shaping modern finance as we know it, Sid. So we certainly appreciate you and your time today and all the things you're doing with Jet King over in India.
Thank you.
It's been a real treat to have you on the show today. Before we let you go, though, Sid, if our audience is like, hey, I like what Sid is saying, and I'd like to know more about what Jet King is doing, what's the best place for me to send him to get more info?
So we have two websites. So one is our education website, which we're running because we're still operating that business. So that's so to get everything around Jet King and its Bitcoin strategy, it's on jetking.org. And our X handle is Jet King Limited, and people are very happy to connect with people. And my X handle is at Sid Barwani, BHARWANI. I think these are the three places that you can reach out to.
Amazing. Well, Sid, we thank you so much for your time today. And when you guys make your next big Bitcoin purchase, I want you back on this show to announce it to the world because it's been an absolute treat to have you. And we hope to see you again here on the Blockchain Report again real soon.
Thank you. Thank you, Ang. Thank you so much.
Pleasure is all mine. We're going to a quick break. When we're back, we got some of today's biggest news stories, and our second guest of the day is ready to make a really big announcement that you're not going to want to miss. Stay tuned. More Blockchain Report after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back to this morning's bull run. It is 8:48 PST. Bitcoin sitting at about $116,374, and we got a lot of news to cover. So let's get into it. As institutions, well, they're eating steak, and retail's chasing Cheetos. That's the summary from a new report from the crypto trading firm and market maker Wintermute, which found that the first half of 2025 marked a hard divergence in strategy between institutional and retail investors. Institutions, well, they're loading up on Bitcoin and Ethereum like it's spiced ham for their doomsday bunker. Retail, they're piling into meme coins like Whiff, Bonk, and Popcat because apparently nothing screams investment thesis quite like a cat emoji. According to Wintermute's report, institutional allocations to major coins sit at a hefty 67%, mostly thanks to ETF inflows and other accumulation vehicles. Meanwhile, retail interest in majors dropped 9%, down to 37% as they poured into altcoin casino tokens instead. This 30-point gap is the widest it's ever been. So, yeah, institutions are here for capital preservation and macro exposure. Retail is here for vibes and volatility. Wintermute's CEO Evgeny Gavoy said this isn't a blip either. It's a sign of maturity. Institutions are treating crypto like a real asset class. Retail is still treating it like a high-stakes Pokemon tournament. Derivatives usage among institutions is also soaring, with OTC options volume up 412% compared to the first half of 2024. Or in other words, smart money is hedging, generating yield, and playing chess. Retail is YOLOing Doge and calling it research. Bonk, Whiff, and Popcat gained traction. Doge and Shiba Inu lost dominance, but Doge, SHIB, and Pepe are still the holy trinity of GMCI meme indexes. Looking ahead, well, keep an eye on October. The SEC is set to decide on spot Dogecoin ETFs. Great. Grayscale, Rex Osprey, and Bitwise have all filed. So while institutions build Bitcoin positions like adults, retail might soon get to hodl dog money inside a federally approved investment vehicle. Welcome to the most rational bull market ever. Just great. In other news, the U.S. House of Representatives is kicking off Crypto Week, which apparently now gets its own congressional theme week, like Shark Week, but, for lobbying. There it is. On the docket, we got three major bills: the ever so subtle Guiding and Establishing National Innovation for U.S. Stablecoins Act, aka the Genius Act, the Clarity Act, and the bill that would ban CBDCs, which would prohibit Federal Reserve banks from offering certain products. GOP lawmakers are pushing this trifecta of legislation through the rules of committee this week in hopes of securing a House floor vote before Congress packs up for its August recess. So if you've been craving crypto regulation written by actual dinosaurs in suits, now, my friends, is your moment. The House GOP is laser focused on the Genius Act after it passed the Senate in June with rare bipartisan support. But Democrats, led by California Representative Maxine Waters, aren't exactly rolling out the welcome mat. Waters submitted 4 different amendments to the bill, all aimed squarely at crypto corruption. Her MSNBC op-ed reads like a bit of a congressional subtweet. She slammed legislation as being written by and for the crypto industry and took aim at the Trump family's involvement in crypto. Waters wants a rule blocking the president, vice president, members of Congress, and their families from promoting or holding cryptocurrencies. She also proposed banning any U.S. Treasury endorsement of foreign stablecoin regimes if the country's leader has ever described themselves as a dictator, which, while oddly specific, feels like a direct jab at El Salvador's Nayib Bukele, who famously called himself the world's coolest dictator while laser-eyeing his way through Bitcoin Twitter. On the flip side, Republican Representative Warren Davidson suggested a much more Bitcoiner-friendly amendment, language that would reinforce every citizen's right to self-custody their digital assets via hardware or software wallets. The exact phrasing was lifted from the Clarity Act because apparently even Congress is into copy-pasting. Arkansas Representative French Hill, who chairs the House Financial Services Committee and plays hype man for this week's crypto push, said the bills would help make America, as President Trump wants, a leader in financial technology. Assuming, of course, they can squeeze in a floor vote before they head out for recess. Congress only has 8 days left in the session this month, and they still haven't figured out if meme coins count as campaign donations. In the meantime, Coinbase-backed lobbying group Stand With Crypto is urging lawmakers to pass the Clarity Act because nothing says transparency like lobbying for a bill named Clarity. And MetaPlanet, well, they're back on their Michael Saylor arc. The Tokyo-listed company announced it purchased another 797 Bitcoin, bringing its total stash to a very casual 16,352 BTC. Value of the purchase? A very tidy $89 million. The average price per Bitcoin? $111,700, which, if you're doing the math, means they're not dollar cost averaging. Now, taking a look now at BitcoinTreasuries.com, let's take a peek here. This is my favorite website in the world. This is where you can get all the top public treasuries that are holding Bitcoin on their balance sheets, and we can see who's winning the race right now. It's kind of a fun game. Who's in the head? Well, right now, leading the pack, no surprise there, we got MicroStrategy. They have like over 600,000 Bitcoin now. But for all purposes here, let's check out MetaPlanet. What are they at, 5, I think, right now? So if we click on MetaPlanet here, guys, let's just give that a little click. You can go on there and you can see more information about all of MetaPlanet's Bitcoin holdings. So right now you see they got 16,352. Their average price per Bitcoin is about $99,500, but they have a profit loss right now of about 17%. So they're up 17% in unrealized gains on their Bitcoin purchases, so I think they're doing okay. But yeah, BitcoinTreasuries.net, number one place on the interwebs to check out what companies are hoarding Bitcoin. So make sure to take a peek at that. Let's get back to camera one here. So as we said, they remain 5th on the board. It's about 3,000 Bitcoin away from reaching Riot Platforms, which we saw was number 4. They could get there pretty soon. They've scrapped their old 21 million plan and launched something called the 555 million plan, aiming to accumulate 210,000 Bitcoin by 2027. That would be 1% of Bitcoin's total supply. And MetaPlanet, well, they're not just stacking, they're also the title sponsor of Bitcoin Asia 2025, which is taking place in Hong Kong this August. Will I be there? Probably not, but there'll be a lot of interesting people in the industry too, so you should make sure to get your tickets if you're out in Asia. Now, this means that MetaPlanet's not just buying Bitcoin, they are quite literally throwing the next big Bitcoin party as the hosts of Bitcoin Asia. CEO Simon Gierevich called Bitcoin a foundational asset for long-term capital formation, which also means we're not traders, we're just black holing Bitcoin off of the market. Now, recently, Gierevich spoke in an interview in which he talked with Bitcoin Magazine's Isabella Santos about how MetaPlanet is inspiring others to do the same and its Bitcoin per share adoption. So let's take a listen and see what he had to say. Roll the clip.
Well, it's obviously very humbling that people are looking to emulate us in the same way that Michael Saylor and Strategy have been very inspiring to our own journey. You just need time to pass. People need to see more examples of Bitcoin Treasury strategy working out, and obviously seeing Strategy's performance, seeing our performance, that's inspired other people to consider the same. And so, we're often reached out to by companies that want to do the same, and we engage them in conversation, share with them our best practices. But I think, we're just scratching the surface. Now there's, I think, 80 to 100 companies that have Bitcoin on the balance sheet, and there'll be probably 10 times that a year from now.
And I was recently at one of your annual shareholder meetings, and you guys mentioned Bitcoin per share. You guys were the first ones that I've ever heard to adopt this term, Bitcoin per share. What does that mean in simple terms?
So simply, it helps you think about how many Bitcoin you have associated with each share of the company. And so in a Bitcoin treasury company's business, what you're constantly doing is raising new capital. And historically, traditionally, if you sell equity and you dilute your shareholders, that's perceived to be negative. People don't want to be diluted. I have 10%, I always want 10%. But for a Bitcoin treasury company, when you're selling shares at a premium at buying Bitcoin, you are increasing Bitcoin per share. You're accreting value to shareholders. You're giving additional Bitcoin that you're purchasing, pari passu to all the existing shareholders. So it's a really, really good measure to tell you whether a company is performing well, whether it's doing its job.
Seems like MetaPlanet is definitely doing its job. They've got over 16,000 Bitcoin in their treasury right now. And MetaPlanet is now currently the largest corporate Bitcoin holder in all of Asia. Because let's be real, who needs soy sauce futures when instead you can just stack sats? And Coinbase, well, their stock recently hit an all-time high because apparently regulatory clarity is now bullish all the way. Shares of Coin peaked at just under $400, pushing its market cap past $100 billion and making it the most expensive way to say I illegally use crypto. Now, the rally coincided with Bitcoin breaking out to 123K, but Coinbase got an extra boost from some political tailwinds, specifically the Genius Act, the stablecoin regulation signature. Now, Coinbase's deal with Circle, which gives them 50% of USDC reserves revenue, is also a key factor. That's right, Coinbase doesn't just trade stables, they siphon passive yield from them like a JP Morgan with a hoodie. Now add in the Bitcoin Rewards credit card, plans for Coinbase payments, and a recent run. Now over the last month, coin stock is up over 60%, and if you're wondering whether institutions care, answer is they do. Coinbase was added to the S&P 500, replacing Discover Financial Services. But some firms still think the stock is misunderstood. Bernstein raised their price target to $510 last month. JMP revised it to $400 from $475 because Wall Street's favorite hobby is hedging while bullish. But in a bull market where Bitcoin is a magnet for capital and the US might finally pass intelligent crypto regulation, Coinbase looks less like a gamble and more like the Nasdaq for the next financial era. And strategy, we can't go a bull run without talking about them. They might be sitting on a Bitcoin time bomb, says some, because when you're the largest corporate holder of Bitcoin, holding around 3% of the total supply currently, any cracks in the facade turn into fault lines. According to one analyst, Leshka.eth, strategy is basically the financial equivalent of a guy standing on a bar stool, juggling chainsaws, yelling, "Trust me, bro, I've done this before." Because that $71 billion was built on $7.2 billion in convertible debt. And their average purchase price, about $71K. So if Bitcoin were to dip below that, even temporarily, the pressure on Strategy's books could get very real very quickly. Now, unlike spot ETFs, they don't have any nice little cash cushions or redemption options. If Bitcoin were to tank, the only way out is selling BTC or diluting equity. Either way, we're talking tremors across the entire crypto market as a result of something like this. And it would get worse. Strategy stock trades at a premium up to 100% above net asset value. A premium that only exists if everyone keeps believing in the magic internet money. Now, its feedback loop is powered kind of by vibes. If investor sentiment were to sour, so does the premium. And suddenly they're out of fresh capital to buy more Bitcoin for their books, which means forced selling then enters the chat. And we all remember how Terra Luna turned $40 billion into zero faster than you can say algorithmic stablecoin. Now, let's add this little addition for flavor here. Their software business, now looking great. Some consider it dead on arrival right now, as revenue dropped to a 15-year low, and they've cut over 20% of their staff since 2020 alone. So the company is now a Bitcoin fund wearing a tech company Halloween costume. Now, critics are also pointing out that Bitcoin was designed to be decentralized, and yet one publicly traded company now controls 3% of all coins in existence. That's less than ideal. But before we hit the panic button here, Strategy doesn't have to repay those bonds anytime soon. They've got maturities spread out through 2031 and could always issue more stock instead of dumping Bitcoin. Still, Leshka's point, it stands out. A system based entirely on internal optimism, meme magic, and rolling the premium dice is probably not the most stable foundation. And if it topples, well, the dominoes won't care that Saylor tweeted through it this time. And in other news, Bitcoin's creator, Satoshi Nakamoto. He's now the 11th richest person in the world after Bitcoin tapped 120K just this past weekend. Nakamoto is believed to hold 1.096 million Bitcoin across thousands of wallets, a stash now worth over $131 billion at current prices, according to blockchain analytics firm Arkham. That would, in theory, place Nakamoto above Michael Dell, the CEO of Dell Technologies, who currently holds a net worth of $125 billion based on the latest Forbes billionaire rankings. However, Forbes does not consider crypto wallet holdings when evaluating net worth. It only tracks publicly verifiable holdings like stocks and equity. So Bitcoin just crossed over 120K on Monday, reaching a new all-time high of 123. And according to Nansen data, but that still isn't quite enough to push Nakamoto into the top spot just yet. Elon Musk remains the richest billionaire in the world with a net worth of over $404 billion, followed by Larry Ellison of Oracle and Mark Zuckerberg of Meta, both reportedly sitting around that $274 billion mark. Now, to overtake Musk, Bitcoin would need to spike at least 208%, hitting a price of $370,000 per coin, assuming other billionaire net worths stay unchanged. In a June 2nd post on X, Bloomberg analyst Eric Balkunis predicted that Nakamoto could become the second richest billionaire by the end of 2026, noting that if Bitcoin continues its normal 50% annual growth, the milestone could happen sometime next year-ish. It's fascinating to ponder that the founder of something so successful never cashed in, Balkunis wrote, comparing Nakamoto to Jack Bogle, the late founder of the Vanguard Group, who died in 2019 with a net worth of $80 million, despite his massive impact on the financial world. Now, 10x Research head Marcus Thielen told Cointelegraph last Thursday that there's a 60% chance that Bitcoin will register a 20% gain in the next 2 months, potentially hitting $133,000 per coin by September. Meanwhile, Bitwise CIO Matt Hogan said in May that Bitcoin could reach $200,000 by the end of 2025, driven by a supply shock triggered by institutional demand. BitMEX co-founder Arthur Hayes went even further, predicting that Bitcoin would hit $250K by the end of this year. Nakamoto still holds more Bitcoin than anyone else by a wide margin, and according to BitBo, corporations and custodians collectively hold 847,000 BTC, or about 4% of Bitcoin's capped supply. Now, among individual whales, the Winklevi twins are believed to hold around 70,000 Bitcoin, Tim Draper holds around 30, and Michael Saylor personally owns about 17,700 BTC outside of Strategy's holdings. Now, as Bitcoin's price climbs, Nakamoto's untouched stash continues to grow in value, and the race to the top of the billionaire leaderboard may be far from over. What do we think? Are we going to next story, guys? Moving on, let's keep doing it. Next up, Robert Kiyosaki. He's back at it again. This time, he's buying another Bitcoin for a price of $110,000. Because nothing screams sound investment strategy like publicly announcing you FOMO'd into a six-figure coin during the banana zone. Yes, the banana zone. That is the official term for the part of the market cycle where people who swore they'd wait for the dip finally buy the top. And Kiyosaki, he doesn't care. He tweeted that he'd rather be a sucker than a loser if Bitcoin ends up at $1 million. And honestly, that's the kind of unhinged confidence that made him famous in the first place. He said that he follows the rule, pigs get fat, hogs get slaughtered. Or in other words, buy while the dumber pigs are still grazing. Wait too long, and you're bacon, friend. He's gambling that his $110,000 coin will look like a steal when Bitcoin hits seven figures. He admits that he first bought Bitcoin at $6,000, and it felt, even then, a little expensive. So this time, instead of hesitating, he's going all in on experience and vibes. Kiyosaki also said he can stomach a $100,000 loss thanks to his past work and savings. Must be nice. But nonetheless, that's probably not the best advice for someone thinking about mortgaging their Honda Civic to buy 0.2 BTC. Still, he's not telling people to copy him. He's telling them to think for themselves. Even if you can only afford one Satoshi, 100 millionth of a Bitcoin, he says you should still buy it. Why? Because he believes the people who don't look back, and he believes that people who don't will look back and wish that they had. And unlike most talking heads, he actually shares his entry point. No vague, I've been accumulating stuff. No, he bought in at 110K and he told the world about it. which means if this goes south, we all get to witness it in 4K. But if he's right, the pigs feast, and the hogs, they get smoked. We're taking a break. When we're back, we got special guests joining us in the studio today. You won't want to miss it. Stay tuned. More Blockchain Report coming up. All right, guys, welcome back to this morning's bull run. And this next story hits a little close to home as Roxom is launching the world's first Bitcoin-denominated stock exchange, and the waitlist is already open. Starting in September, investors will be able to buy and sell shares of companies like MicroStrategy and MetaPlanet directly in Bitcoin. No fiat, no middlemen. The goal? Turn Bitcoin from just an asset into the financial system itself, where balance sheet exposure to BTC becomes a tradable market sector. And it's not just talk. Roxom's already raised $17.9 million, built its own treasury of 84 BTC, and plans to acquire more. They're also launching a 24/7 Bitcoin media network that will likely be the greatest thing in the world of finance, entertainment, any best thing they've ever seen, but hey, I'm a little biased. Nonetheless, Bitcoin isn't just money anymore, fam. It is infrastructure, and Roxom wants to be the capital market that it trades on. So joining us to talk about this story today, we have none other than the co-founder of Roxom and RoxomTV, Borja Martel-Seward, and the director of Bitcoin strategy at RoxomTV, Alex McShane. Gentlemen, welcome to the show this morning. It is exciting to have you both on.
Hey Hank, how are you? Thank you for having us, man, as always. How's everything?
Oh, the pleasure is all mine. I mean, it's great. We reached all-time highs yesterday morning. I know we've had a little bit of a drawback, but the vibes are good. Let's get right into it, gentlemen. Borja, I want to start with you. What was the inspiration for the idea for a Bitcoin-denominated stock exchange, and why was now the time to build it?
Well, to be honest, Hank, this entire Bitcoin treasury thing is like a gift for us, because when we started Roxom, we didn't plan that there would be a frenzy, a mania about companies building up Bitcoin treasuries. When we started on our thesis, which is the story of capital markets is that the largest capital markets grow within the strongest currencies. We've seen that in Amsterdam on the guilder, London on the pound, Wall Street on the dollar. And for us, it's inevitable, number one, that Bitcoin will develop its own capital markets. And number two, that Bitcoin's capital markets will be one of the largest, if not the largest in the planet. Now, the thing is, when we started, there was nothing. A question that we always asked ourselves was, how will this play out? Like, how will Bitcoin capital markets play out? How will they start? And so on. And the truth is that this cycle has given us the first company industry within the Bitcoin capital markets, which is the Bitcoin treasury companies. And suddenly now we have this whole bunch of companies all over the world IPOing, or public companies that are transitioning into a Bitcoin treasury model, which essentially means that we are seeing real time, we're living a historical moment in which you have the first Bitcoin stocks, like truly Bitcoin stocks, because before we had crypto stocks, like for example, public companies like Coinbase. Well, Coinbase is an all-encompassing crypto company. They do Base, which is a layer 2. They do plenty of cryptocurrencies and so on. But these Bitcoin treasury companies, they are specifically Bitcoin companies. They are specifically Bitcoin stocks. So we are seeing real time how, again, the first vertical, the first industry, the first market within the Bitcoin capital markets is growing, is being born and growing. And this for us, naturally, it was a natural step forward for us, because since we're building Bitcoin capital markets, when we saw this mania, this frenzy around Bitcoin stocks, Bitcoin treasury stocks, then that's right there what we are doing, like finding a perfect match for us. And at the end of the day, it also makes all the sense in the world because it's the Bitcoin treasury companies, a vertical sector, let's say, they have two main issues. The first issue is that all of these Bitcoin treasury companies, they are listed all over the place. So you have in Japan, Argentina, India, Korea, US, Europe, Brazil, etc. So for any Bitcoiner across the world, it's honestly really, really hard to access all of these companies because you would need 20 broker dealer accounts in different countries in different currencies, and then you have to do FX and send money abroad and this and that. Number two, you have a denomination issue. Like, for example, MetaPlanet is listed in yen, in euros, and in dollars. And the more markets MetaPlanet gets listed into, or MicroStrategy or whatever, the more currencies it is being quoted and listed at. So at the end of the day, for us, it makes all the sense in the world for all of these Bitcoin treasury companies to be listed, quoted, and traded in the true currency, in the only true currency, and actually in the currency on which they operate, which is Bitcoin. Sorry, Bitcoin. So for us, building this, like say, Bitcoin treasury stock exchange where anybody throughout the world can access through Bitcoin globally, without borders, without friction, all of the Bitcoin treasuries, and also that they are trading them, investing in them, using Bitcoin as a unit of account makes all the sense in the world. And actually, we're very happy. We're very happy to be building this, and especially because everybody in the broader Bitcoin community is loving this product that we're building. So we're super eager to be able to launch this by the end of the quarter. And well, in the meantime, we have the upcoming derivatives product coming very soon before the Bitcoin treasury. So well, now we're very excited with everything that's coming up ahead.
Amazing. And this is for McShane. McShane, how does Roxom's Bitcoin Treasuries product fundamentally change how investors access Bitcoin native equities? Is that they can just do it from anywhere, kind of what Borja was saying? They don't have to be on all of these different markets and they can just do it all in one place, or is there more to it than just that?
Yeah, I think like the underlying, like a fundamental change is you now have kind of access to the free TradFi markets with Bitcoin, which was difficult before. You know, you had to sell into Bitcoin and go through these fiat apparatuses and systems. But depending on your jurisdiction, it's just, you know, KYC, send your Bitcoin, and now you can start actually using your Bitcoin. There's been a lot of narrative shifts over the years, and probably Bitcoin as a whole adopted some pretty early on naive perspectives about how it would interact with traditional capital markets. And what we've seen this year, in my opinion at least, is a real maturing of that narrative, and some actually like high dollar signal and high Bitcoin signal as the price pumps and institutions and governments start to back it more and more, and start to come up with new use cases for it. Maybe that's kind of new lending instruments as Bitcoin treasury codes get stood up around the world. Perhaps that's new kind of stablecoin interactions or national kind of strategic reserves around the world. There's a lot of proposals on the table, but what's interesting is, of course, everyone wanted this to happen kind of overnight. Just all the air would be sucked out of fiat, and everyone would be on a Bitcoin standard over the course of like a couple of years. And there's just so many trillions of dollars that are not interested in that happening. They would never let the system fail that quickly if they could prevent it. So what we'll see is this kind of slow drip, and on the long time frame, that's what we've seen is now trillions of dollars being moved over to Bitcoin just year by year. And what does that mean, and how, you know, like, I predict it will kind of replicate some of the things that happened early on, but were shut down by governments who were not interested in Bitcoin at the time. More peer-to-peer exchange, more peer-to-peer marketplaces, more social media use cases, more micropayments and layer 2 use cases. But the kind of the highest volume of this Bitcoin movement instead of just buying and selling the asset outright, I think will be in accessing traditional equities, capital markets, and commodities, and perpetual futures. The interesting kind of behavior to watch is going to be the consumer behavior of like how they interact with these markets, because forever we've been denominating everything in this moving measured unit of a currency that is the US dollar, or select your local fiat currency that's infinitely debased. That's not a very good measure of anything or the world. And when you start to view the world in Bitcoin terms, you get a whole different picture of what is happening and a more kind of a more honest look at the markets. And that's kind of, I think, the underlying mission here at Roxom with the terminal and with the exchange. What we're trying to do as a media organization is help people reframe to a Bitcoin mindset and prepare for this transition from bimetallism to a Bitcoin standard. So, like, to give you an example, Pompa tweeted this today that over since 2020, the S&P has gained 98% in US dollar terms. Hank, I want you to guess how much it's up or down in Bitcoin terms over that same period.
Oh boy. Well, you said it's 98%
So
in dollar terms, so
yes, it's gained. The S&P 500, if you had invested in it, you'd be up 98% in US dollar terms since 2020. What does that look like in Bitcoin terms?
I mean, I imagine it'd be much, much higher then, right? Like 4 or 5x? I don't know.
No, it's down 85%. The S&P 500 is actually down 85%. Right. Wow. So just not to put you on the spot in particular, just to demonstrate that we're not used to viewing the world on Bitcoin terms. A lot of Bitcoiners are somewhat, but they're lacking the instruments to interact with everything and reprice it in Bitcoin. That's where, Marty Bent and Matt Odell put out that really interesting tool that redenominates any currency that shows up on your screen. It's a plugin that will reprice it in Bitcoin for you. I think this is actually what we need. We need the software tools and services that are going to allow people. It outsources this sort of mental gymnastics and gets them more comfortable, because it's really something akin to learning a new language. Like, you have to really immerse yourself in the language of Bitcoin, and that means repricing all the equities that you interact with day to day. I mean, if you look at the lower kind of third of the screen now, get a sense for how trippy it is to view, what is the Netflix stock price in Bitcoin today? Is it up or down? Like, which companies are actually outperforming Bitcoin? We know they're probably up in dollar terms or down, but how does it look in Bitcoin? So that's kind of an ongoing, Bitcoin marketing campaign that I think everyone can get behind if you believe in the future of this thing.
Yeah. And to that point, Borja, has that been the biggest challenge for you guys, is getting the world to see things in, I think the term that was used by McShane was Bitcoin terms? What's the biggest challenge in building this new platform that completely bypasses fiat and brokers? What's been the biggest hurdle for you guys while building Roxom?
I think, Hank, that for the Bitcoiners throughout the world, you have two different categories of Bitcoiners. You have the strong hodl maxis, and you have the smart, what I call the smart Bitcoiners. And I'll give you an example. In the last 5 years, if you bought NVIDIA, you would be up 300% in Bitcoin. So if from 2020 to today you had NVIDIA, your portfolio in Bitcoin would be up 300%. So me, for example, and I try to consider myself a smart Bitcoiner, I would have loved to have NVIDIA instead of Bitcoin. And why? Because I would be worth 300% more than if I had kept my Bitcoin. And what I want to say and mean with this is that today, a big part of Bitcoin is like you should buy and hodl and do anything and don't do anything else. And I disagree. I strongly disagree. I think that much better than hodling is to deploy your Bitcoin in opportunities that is going to yield even more Bitcoin. NVIDIA is one. MicroStrategy is another. MicroStrategy from 2020, early 24 to today has done a 200% in Bitcoin. So if you had 100 Bitcoins and you invested them in MicroStrategy in 24, you'd be worth 300 Bitcoins today. So what was it better in the last 2 years, to hold Bitcoin or to hold MicroStrategy? Well, the truth is it was better to hold MicroStrategy. And what I reinforce is hodling and just keeping Bitcoin is not the best way of doing Bitcoin. Actually, that's pretty like, how can I say it? That's very hard-headed. That's just being like a hodl maxi just because. So I would say that our challenge is to enlighten this set of Bitcoiners and show them how, honestly, better than buying one Bitcoin and keeping your Bitcoin is to increase that one Bitcoin that you have. And many times, these hodl Bitcoiners remind me of Argentines. And what happens in Argentina? In Argentina, you had the Argentines that started saving in dollars and keeping those dollars under the mattress. And then you had the Argentines that not only escaped the peso and bought dollars, but actually put those dollars to work. And for me, a Bitcoiner that the only thing that he does is buying Bitcoin is the same as an Argentine that the only thing that he does is buying US dollars. Like, clap, yes, you've got rid of the weaker currency. You've got rid of the shitty currency. Like, you're an Argentine, you have pesos, now you bought dollars. Okay, congratulations, man. You have escaped the shitty currency, the weak currency. But now, those dollars, you need to do something with them. You know, like, it's not only about keeping those dollars under the mattress. And for Bitcoin, I believe it's the same. Like, once you've bought Bitcoin, okay, amazing, congratulations. You've escaped the weaker, the shitty currency. But now what? Are you going to keep those Bitcoins under a mattress, or are you going to work so that those Bitcoins give you some sort of yield, or that you can invest those Bitcoins and get some sort of Bitcoin returns? And again, last 5 years, NVIDIA, 300% up in Bitcoin. MicroStrategy, last 2 years, 200% in Bitcoin. If I go to MetaPlanet, that has gone from 40, 50 yen all the way to 1600 yen in the last 12, 14 months, same thing, amazing returns in Bitcoin. So for us, the difficulty will be in, or the challenge will be in the smart Bitcoiners. They get this, they already deploy Bitcoin, they already put Bitcoin to work, they already denominate investments and trades and things in Bitcoins. So for them, everything is amazing, like Roxom is a perfect product. But for the rest of the Bitcoiner base that are like, just buy and hodl and do nothing else and ride all the way up and all the way down, well, I strongly disagree. I think that there's much better ways to deploy and treat your Bitcoin. And again, I don't like the fact or the idea that I could have more Bitcoins should I invested in NVIDIA 4 or 5 years ago, should I have invested in MicroStrategy 2 years ago, and so on. So we want to make sure that all Bitcoiners understand that it's a good step for you personally to start using Bitcoin as a hurdle rate, as a unit of account, and so on. But that's just the first step. Now, once you've got into this Bitcoin mindset, it's about how to deploy your Bitcoin.
Right. And along those lines, I think you touched on a little bit, Borja, and this one's for McShane. Kind of to Borja's point, this is a new opportunity for investors. I mean, we already have companies like MetaPlanet and Strategy are already listed on fiat exchanges. For those of us out there still trying to wrap our heads around why this is such an exciting opportunity going forward, what changes for investors once they're available to invest in companies like MetaPlanet and Strategy, but in BTC terms? Like, why explicitly, why would they want to do this as opposed to continuing down the fiat route that we've seen for so long?
Because they're not managing risk properly on fiat terms. You're not using a proper measuring stick. Like, your numbers are bad. You have the wrong denominator. Like, what I really like about what Borja said is, like, okay, we can acknowledge, like, there are people who probably are not ever going to be interested in trading. Like, just as a culture in America and in Europe, everyone's trying to chase fast money because they're being debased. So they're basically forced, because the dollar is so weak as a savings technology, to learn how to become, whatever, real estate managers, amateur investment managers, and like traders. And that's fine and good. Like, a lot of Bitcoin's response to that, like from a narrative standpoint, was just buy and hold this. You don't need to do all of that. But what happens over the years is, like, you're going to accumulate a pretty good nest egg if you stay focused on that goal of just accumulating Bitcoin. So now you have all this savings. And if you actually use Bitcoin as the denominator, you're going to see that there's a lot of more opportunities, potential asymmetric upsides. Like, there are things that outperform Bitcoin. And that is like the underlying question on whether or not you should allocate and risk your coins, is not the returns in US dollars, is it going to beat the price appreciation of Bitcoin? Like, I used to do a lot of private equity with a guy called Mike Jarmuz in Bitcoin. And that was the first thing I would talk very honest to investors, is just like, look, don't invest in this company if you don't think it's going to outperform Bitcoin, because that's a silly thing to do. Why would you trade your Bitcoin for less Bitcoin? But the only way to properly measure that is to think in Bitcoin terms. So, like, I would argue over time, like, there's probably plenty of people who are new, and like, I would say for them, like, not to give investment advice, but it's probably best to have some Bitcoin to start. So, like, and then you have to decide, what is your risk profile? How much of that stack are you willing to risk to go try to outperform Bitcoin? If you're open to doing that, then like, Roxom Exchange is for you, and you should be using that, because otherwise you're just not using a correct denominator, and you don't have accurate numbers, and you're not actually seeing the performance versus what you could have had just holding Bitcoin. So it's like it gives you a whole new calculus to measure your investments and assess risk. And so as a risk manager, this is just a necessary tool. It's the logical next step for anyone looking to spend Bitcoin on anything, really.
Yeah, and also, Hank, something to add to what Alex is saying. If, like, in Bitcoin terms, you're generally you're just getting poorer. Like, every day, in general, you're just getting more and more poor. This is if you look at things in Bitcoin. So if you hold traditional stocks, traditional assets, and things that do not outperform Bitcoin, like NVIDIA, MicroStrategy, in this short term, some Bitcoin treasury companies, and some specific assets, in general, the only thing that is happening to your wallet and to yourself is that you're becoming more and more poorer every single day. And this is just because of the fact that your portfolio, your net worth, every single year is worth less and less Bitcoin. It's not worth more and more Bitcoin. Each one of us, if you don't have the money in the right place, your net worth, your portfolio, your everything is worth less and less and less Bitcoin. Now, there's a big trend about people talking about this in real estate. Real estate against Bitcoin is going down bad. And yeah, like your house is worth less and less and less Bitcoin every single day, every single year. So, and most of things are worth less and less Bitcoins every single year. So, using Bitcoin as a hurdle rate, as unit of account, looking at assets and their charts and everything in Bitcoin is truly the only way to start understanding what assets, what things we should hold, and what things we shouldn't. And in Argentina, I always go back to Argentina because in Argentina, the same thing happened. In dollar terms, most things in Argentina were just going down. So most stocks and assets that you would hold in Argentina in dollars, you would be becoming poorer every single day. So only when people started measuring things in dollars, then they could understand what things were desirable to hold, what assets, real estate, stocks, whatever was desirable to hold, and what things not. Because in pesos, everything is going down when the peso is depreciating. But the thing is that in dollars, everything is going down. So in pesos, sorry, everything is going up in pesos. But in dollars, everything is going down. And in the macro world today, same thing is going on. In dollars, most of the markets and assets are going up. If you look at the S&P, like Alex just said, 95, 98% in the last 5 years since 2020. But if you look at that in Bitcoin, it's just going down. So if you want to truly become richer in the only true currency that matters, because the only thing that matters, at least for me and at least for us in Roxom, what we believe is that the only thing that matters is to have a financial well-being in Bitcoin terms, which means that you should always accumulate more Bitcoin, not be worth less Bitcoin. And the only true way to achieve goal is by measuring things in Bitcoin, is by using Bitcoin as unit of account, and ultimately to deploy capital in Bitcoin terms. So it's not bad if you think that you should buy dollars, that you should have dollars, because you could think that the dollar is appreciating against Bitcoin or whatever. But what it's important is that you're always looking at a chart where Bitcoin is your unit of account, and whatever thesis you create, whatever decisions you make, are always with the sole purpose and goal of accumulating more Bitcoin and making sure that your portfolio is worth more Bitcoin, and not that you're getting the opposite result, which is what most people get today, which in the Bitcoin world, you are poorer every single day.
Yeah, it's also interesting that
during this cycle. Oh, go ahead. Yeah. Please.
All good. I was just going to say the kind of velocity and pace and access to markets around Bitcoin is interesting. Like you see a lot of people tweeting, the daily, the weekly close for Bitcoin. Okay, that market doesn't actually close. So when you can trade and interact with the world 24/7 and not have this rather arbitrary 9 to 5 kind of hurdle of banks, you are going to have more surface area for opportunity. And like one really funny example is like if you're tracking Bitcoin narratives and like forget whatever you may think about treasuries, you just recognize that as a thing that's happening about a year ago. And you had said, I'm not gonna do that. I'm not gonna allocate any percent success to that. I'm gonna just hold Bitcoin. Okay, so you would have been, let's say you had one Bitcoin, it was probably around $60,000. You'd be sitting at about a 2x right now. If you had allocated that Bitcoin instead, or some percentage of your portfolio to like a MetaPlanet, seeing the asymmetric upside when almost everyone doubted it, you would be up 20 to 30x. So that's 20 to 30 Bitcoin, depending on which day you bought it, compared to the one Bitcoin you have sitting. That's a worthwhile kind of question for people to consider, but you can't even consider it if you're not thinking on Bitcoin terms. So you're up 20 to 30x in Bitcoin terms. That puts you in the 0.0001% of the best money managers in the world. Like you've outperformed everyone. You've outperformed all of Wall Street, every like high performance hedge fund in the world. And then the only way to even kind of see that opportunity exists is to understand the world through Bitcoin terms. Just a fun example.
Yeah, it kind of brings me to an interesting question here. We're seeing Bitcoin reach new all-time highs, but it seems like retail right now has been sitting pretty idly on the sidelines. Why do you guys think that is? Are they seeing these big numbers and seeing that they feeling like maybe they're priced out of the action right now? Because like you said, Bitcoin going from 60 to 120K, that's a 2x return. If you asked most most investors like, hey, I can promise you a 2x return over the next year or two, they'd be like, where can I park this money? But I feel like our retail specifically feels like maybe they missed the boat. And that's why we're seeing them kind of dabble in these altcoins rather than just jump in on the one tried and true. Like, what do you guys account for the lack of retail FOMO that we're not really seeing this cycle?
Alex?
I'm trying to think of a way to phrase this without insulting retail. They don't know what they're doing.
It's an education thing.
It's not their fault. It's an education thing, right? But that part of your education and upbringing in the U.S. school district is conveniently missing. Nobody learns about taxes. Nobody learns how to allocate capital. Nobody learns anything about money coming out of K through 12 in the U.S. So it's not their fault. They're being debased. They're on a monetary treadmill year after year. They get a 2 or 3% raise. Nobody's telling them, hey, you got debased 12% this year. You're actually getting a pay cut year over year. And that is why life is hard for you. And that is why the middle class is being obliterated. They have to take kind of a rather extreme measure, unfortunately, and get some skin in the game and practice and use Bitcoin. It can just be a few dollars at a time. I think one of the most important sort of marketing campaigns for Bitcoin, which is not a company, but just it's like you can buy a fraction of it and use that. Like you don't have to start with $120,000 worth of capital. That's an amount of money I would say most people can't even dream of having. Start with a little, watch it grow. You're not going to get rich quick, but your understanding of this is going to change the way you make decisions. And that 1% improvement in decisions is going to compound in a way that will change your life forever. And it's only going to take a few years. But you do have to put in the time. You have to learn how to use it. You got to spend a couple afternoons a week interacting with it, trying the different tools, products, not just ours, everyone's, hardware wallets, different exchanges, fee rates. You gotta learn the system a little bit, and try to get yourself in a where you're not as heavily reliant on trusted third parties, so that you can start to make your own autonomous decisions. But that requires learning and gathering knowledge. And I think we can all do a better job of helping people, take those steps. It's going to take several touch points to get there. You don't learn this stuff overnight.
Yeah. And Borja, with this educational barrier to entry that we're seeing, especially within retail, what kind of investor do you envision being the most attracted to the products at Roxom? Are we talking whales, sovereign individuals, institutions? Who do you envision this platform being for?
Whales, institutions, and retail in that order. Okay. The simple explanation is that, and we already see it, is that the people who get the most, that you should always use Bitcoin as a unit of account, as a hurdle rate, that you should measure investments in Bitcoin. The rest is noise, the rest doesn't matter, is whales. Because thinking in Bitcoin terms, using Bitcoin as a hurdle rate, understanding things in Bitcoin is directly proportional to your net worth exposure to Bitcoin. So usually, and I'm sorry, I will change whales for what Michael Saylor calls Bitcoin double maxis. The more Bitcoin you have, the more you understand that that's the hurdle rate you wanna be sure that you are using. That the more Bitcoin you have, the more you understand that you want to make sure that you are measuring things in Bitcoin, that Bitcoin is your unit of account, and that whatever investment you do, you make sure that you look at the Bitcoin returns, not at the dollar returns, not at the pesos returns, not at the yen returns, not at the euro returns, but actually at the Bitcoin returns. Because as somebody very wise once told me, if I give you $100 million, say, at a $50,000 Bitcoin, 2,000 Bitcoins, or today at 100K Bitcoin, 1,000 Bitcoins. If I give you 1,000 Bitcoins and you build your company and everything is amazing and so on, and then you exit in 5 years for $500 million, But when you give me the money back, you give me 500 Bitcoins. I've lost 50% of my investment. I didn't win $400 million. I lost 500 Bitcoin. And the truth is that the more Bitcoin somebody has, and the closer you get to 100% of your net worth in Bitcoin, then it is when people click and understand, okay, it's not about having all my money in Bitcoin, but it's actually about measuring my wealth and my investments in Bitcoin, and that's the magic trick. So in the order I give you.
Hank, I can give you a funny. I was gonna say I can give you a funny anecdote on that recently that happened to me. So I've been like all in on Bitcoin for a while, as in like I don't keep any cash that I don't need for more than like a month, for like rent and expenses. Mm-hmm. Never have. I decided I was kind of tired of living hand to mouth, and that I would like take some cash and then have some breathing room, not like completely change lifestyle or anything, but just have I didn't have a good strong feel of what was going to happen next in the markets. Of course, the minute I do that, dude, the markets rip and we go to like new all-time high after new all-time high. So on Bitcoin terms, I got punished, completely obliterated for doing that. So you win and learn and lose some, but at least now I can look back and do the math on that properly. In Bitcoin terms, and know that like, okay, I can learn from that mistake and make different investment decision next time.
Yeah, I mean, I think we all take our Bitcoin medicine at some point as we're in this space, and especially early on, you're feeling it out. I remember early on, I bought 2 at $5,000, and I was like, this is great. And then I think I lost $1,000 in like a minute. And I was like, I can't do this. And then I ended up selling one of them. Looking back now, that was a $115,000 mistake on my end. So sometimes you take your medicine, but as long as you're learning for it, you'll be better.
No, Hank, it's worse. It's worse than that. It's worse than $115,000 mistake. It was a Bitcoin mistake. It was a one Bitcoin mistake.
I know. You're right. I need to start reprogramming myself in BTC terms too. You're right. Borja, I know the launch waitlist for Roxom is now open. First, if people want to join the waitlist, how can they do so? And what can these early users expect between now and the official rollout, which I believe is in September?
Yeah, so we'll be rolling out by the end of the quarter the Bitcoin Treasuries product. You can register in roxom.com/treasuries, the link that you're seeing right now on screen. And in the meantime, early waiting list users will be able to try our first product, which is the initial Bitcoin contracts that we're launching, which is S&P 500 against Bitcoin, the Nasdaq index against Bitcoin, gold against Bitcoin, and oil against Bitcoin. So in the meantime, and until our Bitcoin Treasury stocks product, early users will be able to trade those contracts. Essentially, you will be able to long or short the S&P, the Nasdaq, gold, and oil in Bitcoin terms, which is also going to be incredibly interesting and incredibly fun as well.
Amazing. And McShane, do you see Roxom as a platform that maybe even eventually replaces TradFi, or is it one that just runs parallel to it for those opting out of the fiat system?
It's gonna be a slow bleed. I think there's a lot of funny Bitcoin expressions that underline like my thoughts about this, but. No, I think the world will be moved, like willingly or not, ready or not, to a Bitcoin standard. But I think it's going to take a long time, and we'll exist in this place of bimetallism, because look, you can't stop like malevolent actors and governments from like they cannot resist the temptation to print their own currency and money and make themselves rich on their own terms. But what you're going to see is they're going to print all that money and allocate it immediately to Bitcoin, and the rest of the world, as has been happening, is going to be left to carry the weight of that inflation. So both systems, I think, will exist. It's unclear to me whether Bitcoiners want or are going to find a way to scale it to cover transactions for the world. There's a whole lot of FUD out there. I think it totally can. And in some places in the world, it does. There are entire communities that operate on a Bitcoin standard. I've been to them. You can live very easily and buy your food and buy anything you need in Bitcoin terms. So I think like for a payments solution, like it remains to be seen how and how does it scale. But I don't think fiat disappears completely because there's just too much vested interest in the ability to debase others to make yourselves rich. Like the incentives don't point to that ever really stopping for me. I think you're just going to see more and more of the world's long-term thinking and planning and money be tied up in Bitcoin. And so, yeah, I mean, in short, I absolutely think it will replace kind of the volume of all trades and exchanges that are made. Like, I think 10, 20 years from now, that will all be denominated in Bitcoin. And, the price relatively will stabilize to a point where people will use that as their unit of account in the world for large purchases, and ideally for small ones too. I think it scales. If you make several bad decisions on Bitcoin terms every day, just going about your life, kind of shopping or whatever, it'd be more useful to obviously have Bitcoin for your unit of account there as well. It doesn't change. Like the thesis doesn't change at a small scale. But I don't know. I think it's so mimetic and well distributed and robust, and that for better or worse, like Bitcoin's for enemies, as they say. Like everyone in the world's going to start using it, so it behooves everyone to start thinking on its terms.
Yeah, and to Alex's point, Hank, when capital markets transitioned to the pound from the guilder didn't disappear. I mean, then it eventually did, but for other reasons. Then Wall Street outgrew the London Stock Exchange, and the pound didn't disappear. It's still existing until today. So this doesn't mean that fiat will disappear and so on. It just means that the strongest markets are changing, and in the same way that the strongest markets at a given point were in Amsterdam on the guilder, and then they were in London on the pound, and now they are in dollars on the in Wall Street on the dollar. This doesn't mean that any of those will disappear. It just means that the next strong financial market and center of the world is going to be Bitcoin. At least this is what we understand and what we believe. So the most liquidity,
that makes sense.
best IPOs, the best things will be on Bitcoin, not on Wall Street or on the London Stock Exchange or any of those.
Yeah, I mean, I think the strongest and apex financial market or asset tends to rise to the top, right? And it seems like Bitcoin's starting to take that position on a world forum, and the US dollar is, we've seen it happening in real time, so no need to doubt it now. All right, guys, so I know we got to wrap up here. Before we go, though, really quick, if people wanted to learn more about Roxom and sign up, Borja, where's the best place to send them? And can we get that QR code up here, guys?
Yeah, Twitter @Roxom, our website roxom.com, roxom.com/treasuries to join the Bitcoin Treasuries waiting list. We've got our Telegram community, Roxom SE, and we'll be sending plenty of news, plenty of stuff all over the place very soon. So really looking forward to having everybody testing our Bitcoin products for Bitcoiners, by Bitcoiners. This is us unleashing the Bitcoin economy real time.
Amazing. Well, guys, thank you so much for joining us on the show today. We got to go because we got more programming coming up. But you guys heard it first. Check them out at Roxom, at roxom.com. Sign up. We can't wait for September, guys, and we certainly appreciate you both taking the time to chat with us today. We're excited, and we're looking forward to having you both back on the show again real soon.
Thank you,
and
Alex.
Stop by and come see us in Asia. If you're in Asia at the end of August, come to Hong Kong. Roxom team's going to be there, and we'd love to meet you.
There you go, guys.
Thank you.
All right, guys. Well,
Thanks,
that's
Hank.
it. Oh, you want to go one more thing? Yeah, thanks, guys. That's it for another episode of the Blockchain Report. We will be back tomorrow, Wednesday, same time and place for more crypto chaos and Bitcoin bedlam. Thanks for tuning in. See you mañana.